There you have it, the closing bell on the New York Stock Exchange. The Dow recovered some ground after slipping to start the day, ending in the green, up points. How many points did we get up today? Up 79.87 points.
The S&P 500 and the tech-heavy NASDAQ both rebounded to end the day. The S&P ended the day up more than half a point, and the NASDAQ ended the day in the green with marginal gains. Scott Wren is Senior Global Market Strategist at Wells Fargo Investment Institute, and he joins us now for more on today's market recap and the impact of the Russian invasion of Ukraine. Scott, it's so great to have you with us. Thank you so much for joining us. So let's start with what was driving the market today.
Well, I think the things that are driving the market continue to be news affecting the oil market out of the Russia-Ukraine invasion. I think also, obviously, the Federal Reserve. So we just had those minutes out. We know the Fed's going to hike a bunch of times here over the course of the next 12 months. And of course, the market's wondering how aggressive that might be. So I think in the near term, it's going to be Russia, Ukraine, and what that means for the oil and natural gas market, and then what the Federal Reserve is going to do about inflation.
You know, Scott, many people might not know that Ukraine is the world's leading exporter of corn. Additionally, Russia and Ukraine combine for roughly a quarter of the world's wheat exports. So how is the war disrupting the global food supplies, and who is it impacting the most?
Well, that's interesting because I come from a farming family and I didn't even know that that was as high a percentage as it is. So I think what you're seeing, and you're seeing it in some of the, I guess if you want to call it, say, third world countries, you're seeing food riots right now. And certainly when you have that much corn, fertilizer, wheat, exported from that region, it's going to have an effect on prices, which it has. Grain prices, corn, wheat, and soybeans have all risen quite a bit here. They've come off a little bit, but not much. And so I think what that translates to is certainly high food prices that's going to continue for a while. And if you think there's going to be a few disruptions, basically food crises in some parts of the world, we're already starting to see a little bit of that. And my guess would be we're probably going to see a little bit more of that.
Right. To talk about more things along those lines, Russia is also one of the world's leading exporters of fertilizer, interestingly. So how are the West's sanctions, coupled with high gas prices, impacting the cost of commodities worldwide?
Well, I can tell you that fertilizer prices relative to last year at this time in the United States are basically triple. So, farmers, while they're receiving a good price for their grain, their margins are really getting hit because of this fertilizer price. Farmers are making decisions whether they want to, plant less corn, which takes a lot of fertilizer, and more soybeans, all those kinds of things. So I think the net effect of all that is just going to be higher inflation, higher food inflation. And that's not just for certain parts of the world. That's going to be for much of the world, including the United States. So, the Federal Reserve, there's a reason they look at inflation ex food. And that's because monetary policy doesn't affect really what people consume in terms of food. So we've got a problem there with that. The Black Sea, it's tough to get fertilizer and grain out of there right now, and that's not going to be cured anytime soon.
Scott Wren at the Wells Fargo Investment Institute. Thanks, Scott.
Thank you.